heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Welcome to Bloomberg Technology. I'm Caroline Hyde, live from New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, we are looking at hedge fund exposure to technology. It's hitting a record high. We'll get to the outlook for tech investing from Kristin DeClark of Barclays.
Plus, we hear from YouTube CEO Neal Mohan on his plans to make the video platform even bigger.
And we sit down with the CEO of Ring for her first broadcast interview as a connected camera company gets a new mission statement. But Ed, first we check in on these markets. And we are struggling with the macro picture right now. We're of course seeing a wall of money coming, well, from a supply side to the bond market. We have a big auction for the 7-year debt. We're seeing $44 billion. And remember, auction appetite just wasn't that great for the last couple of days. So we're seeing NASDAQ just being pulled down as yields push higher. The Stoxx 600 in Europe also down by a percentage point. It's notable, though, that the NASDAQ is bouncing off of its lows. Roth down just 0.3%. It's actually the best performing major benchmark here in the United States. So it's really other industry groups that are under pressure today. And as they say, that 7-year yield just ticking up some 5 basis points, 4.62. We're seeing the longer end sell off harder. Move on, though, and I want to give us the risk appetite of choice when it comes to the tech world. Crypto also under pressure a little bit today. Bitcoin just to the downside, but not by much, only a percentage point. Look, 67,500 is currently where we trade. But look, there is some cautious sentiment out there at the moment, Ed. What are you looking at on the micro?
So I'm looking at the US-listed shares of BYD, the EV maker. It's actually a pretty big story coming out of China. They have announced a hybrid drivetrain that is capable of doing more than 1,200 miles or 2,000 kilometers on a single charge or single fill of the tank. It's a hybrid drivetrain, and it's really continued to boost BYD's US-listed shares. It's got a lot of people talking on social media. Check out Bloomberg's coverage out of Hong Kong and learn more about what BYD is doing. The other big mover here in the United States is Apple. Apple up more than a percentage point for most of the session. WWDC invites went out yesterday. I got mine. But the big news is also out of China. A court in China has dismissed a case against Apple that a consumer had brought on the issue of App Store fees and commissions and in-app fees and commissions. Later in the program, we're going to go to Bloomberg's Mark Gurman. It might sound like a familiar story because it's happening here in the United States too. This time, the China side of that discussion, Caroline.
Yeah, and just all of this in a picture of how big tech behemoths have been doing and performing at the moment. We know Apple's been under pressure for the last couple of months, beginning of this year, really. But hedge funds positioning more broadly, the exposure to US tech behemoths is just had a new record high. And of course, that's down to NVIDIA in many ways. Its strong earnings report last week. It's all according to Goldman Sachs Prime Brokerage. Their report is also saying that the so-called Magnificent Seven is now accounting for close to 21% of hedge funds' total net exposure to US single stocks. We want to get a sentiment check on big tech, on allocation, and on companies going public. Kristin Roth DeClark is with us, Global Head of Technology Investment Banking at Barclays. And you have so much wealth of experience and expertise within the investment banking market within technology. In particular focus, you look at companies looking and eyeing going public. But what is ultimately the sentiment of access to growth companies in the US right now?
Yeah, look, there's been a real dearth of opportunity to invest in growth tech in the public markets. If you look just at the 500 or so companies, tech companies that are public right now that are $2 billion market cap or more, there are only less than 30 that have grown 30% in the last year. And so the opportunity to invest in growth isn't really there necessarily in the public market. The bid for IPOs is there from the investor side, but we haven't seen that translate into much activity this year, partially because of the rate environment, and investors, corporates are looking more to 2025 as a year of optimism, I think, in the new issue market.
And look, we add that context of the day with yields just pushing higher for longer, whether it's in Europe as well. We see German bond yields pushing higher as it looks like inflation is hard to curtail. But is it just the rate environment? Is there also an element of political issues? Is that why 2025 is going to really be the year to come?
Yeah, I think at this point, a lot of issuers are saying, 2025 will get through the election cycles. We'll get, to a place where we hopefully start to see rates come back down. So there are some issuers coming out in 2024 and certainly getting a lot of attention from investors, but there's more optimism, I think, in 2025. And that's true for both, growth companies, but also super profitable businesses inside private equity. A lot of the private equity firms are opting to do private minority stake sales to establish marks and get a little bit of liquidity instead of going to the IPO market this year.
Kristin, good morning. Hello. I hear from a lot of founders, a lot of CEOs, a lot of people right now that are much more open-minded to doing some M&A or even going private. Why is that?
Yeah, the take private activities increased significantly this year. It's up 50% in the tech industry from last year. Part of that is an acceptance of kind of where we are from a valuation standpoint. But the other part is on the financing side. The last couple of years, the financing for LBOs have been driven by the direct lenders in the private credit market. We're now starting to see some of the more traditional funding sources in the broadly syndicated market available as well.
Convertible issuance is interesting. Take my word for it. It's interesting. One case study out this morning is Lenovo doing an arrangement with Saudi Arabia through one of its investment firms on very favorable terms. But it's also kind of a quid pro quo, right, where there's the financing side of it, but Lenovo has to set up an R&D facility in that country. I've heard it elsewhere. In fact, I've heard of shareholders selling out of the stock, buying up convertible notes in the same name. What are you seeing in that market?
Well, the convertible market, I think, will be pretty active this year. There are a couple of interesting things that have changed with this higher for longer sentiment. One in particular is that we're now seeing issuers refinance floating rate debt with convertibles, and they're saving up to 50% in interest expense with premiums that are 100%. So it makes a lot of sense for some of these large cap issuers. The other thing we're seeing in the convertible market is large cap issuers doing a convert to repurchase shares. And so I think that the convert activity will only increase meaningfully this year, especially in this environment.
Isn't it interesting that ultimately at a time where markets go from record high to record high, there's less and less access to getting into the public market, and so much of the enthusiasm we talk about on a daily basis is in the private markets. There's also a lot of talk around M&A, and I'm interested as to what you're anticipating there from even fewer publicly traded companies going forward.
Yeah, so the take privates we've talked about, I think that we've also seen an increase in strategic activity in a meaningful way, and we'll continue to see that throughout the balance of the year. And then some of the smaller M&A that's happening tends to be a little, some of these early stage AI technology businesses, but they're scaling very rapidly. So that could, over the next 12, 18, 24 months, mean much larger scale M&A and adding to this already massive IPO backlog.
Kristin, for all of the growth stage technology companies out there that are watching this show right now, be it the founders or staff, what's a good reason to go public? What is a good motivation to list your company?
Well, the biggest reason right now that companies are opting to go public tends to be employee liquidity, being private for a number of years, giving their employees an opportunity to start to find wealth in a publicly traded stock. Or to validate a technology or the staying power of a private company. Some companies opt to go public because their customers are worried they're not going to be around or not going to have long-term funding. And so they, from a reputational standpoint, want to be public. And the last is probably, the investors looking for liquidity. And again, private equity is, I think there will be a number of IPOs that come out over the next couple of years because we haven't seen a lot of activity out of private equity and returning capital to LPs. But right now, they're, for the most part, finding liquidity in the private market more appealing than the IPO market, although we're seeing some really attractive assets coming public just in a more limited basis.
Kristin, Roth, DeClark, Global Head of Technology Investment Banking at Barclays. Terrific way to start the program. Thank you so much. We'll actually continue the conversation on the tech IPO landscape later in the hour with Eric Hippeau of Lerer Hippeau. Really interesting conversation, interesting person, another interesting person you don't want to miss. Coming up in the first instance, we're going to hear from YouTube CEO Neal Mohan on the company's plans for expansion. Caroline, some shares.
Some shares in the publicly traded market that are still available. Salesforce, actually just seeing it up about 0.6%, unlike the rest of the market. We're higher. We are anticipating their earnings after the bell, reporting their fiscal first quarter earnings. Look, how much are we able to see? Data cloud, which obviously helps organize corporate data for analytics, for the all-important AI space. How much is that going to help with their focus on margins as well? This is Bloomberg Technology.
How YouTube became must-watch TV. That's the latest episode of The Circuit, where Bloomberg Originals host Emily Chang sits down with YouTube CEO Neal Mohan about transforming the platform into the world's biggest streamer. Listen to this.
You know, YouTube's really kind of its own sort of unique thing. We're not a social media platform. We're not traditional media in the sense we're not linear television. We're really sort of our own thing. And so if we live up to that vision, we think we're really still in the early days of our growth story and fulfilling what our mission is, which is to give everyone a voice and show them the world.
Based on Nielsen's latest data, YouTube is now by far the biggest streamer in the world. Netflix close behind, and then everybody else drops way down. Hulu, Disney, Max. But you don't get the awards or the critical acclaim. What more does YouTube have to prove?
I do think that YouTube is getting recognized as that platform on television screens. We just surpassed 1 billion hours of watch time on living room screens. And you mentioned the Nielsen ratings. That is certainly something that when I speak to our advertising partners, the brands that look to build connections with consumers on our platform, they recognize that. And they see it as a place not just of this broad reach, you know, the #1 streaming platform here in the US, but also reach that is engaged. And from a brand's perspective, that is something that they are really recognizing. Like I said, it's still the early days of our journey, but I do start to hear that more and more from our partners.
YouTube is printing money for Google, as I understand it, upwards of $15 billion a year. Where will the future revenue growth come from? Talk to us about that strategy and how it will play in.
If you think about YouTube today compared to what YouTube was 5 years ago or certainly 10 years ago, there are an order of magnitude more creators on our platform. We have a breadth of monetization offerings to support this creator economy, not just ads, but subscription business. You know, that was the $15 billion subscription business across all of Google, but also direct fan funding, like channel memberships and things like that. So there's an enormous amount of scale and complexity in the ecosystem that requires us to rethink how we're going to support that creator ecosystem.
YouTube CEO Neal Mohan, along with Bloomberg's Emily Chang. You can catch the full episode of The Circuit tonight, 6 p.m., right here on Bloomberg Television. Meanwhile, coming up, France's Mistral AI. It is eyeing the U.S. market. We'll have all the details. Ed, some breaking news.
Yeah, red headline on the Bloomberg terminal. BHP does not intend to make a firm offer for Anglo American. You remember that BHP had wanted Anglo to extend a deadline that would allow talks for a deal, but they've issued a statement saying they now do not intend to make a firm offer. We're just reading through the statement. Basically, BHP is saying they're unable to reach an agreement with Anglo American on views in respect of South African regulatory risk and also the cost of the deal. We'll stick with it. This is Bloomberg Technology.
OpenAI, because Helen Toner is a former board member of OpenAI and has actually said that the board didn't know about the original 2022 launch of ChatGPT until afterwards, and that they only found out about it on, well, Twitter or X. Let's bring in Bloomberg's Seth Fiegerman for more on what seems to be more discussion in the press coming from Helen Toner. She had already written a piece with Tash as well, another previous board member, about some of their worries about AI governance. This keeps building.
Yeah, I mean, it's remarkable to have a former board member who's just going rogue at this point and really bashing the company, or at least its current leadership. The claim about ChatGPT is remarkable. Here's their biggest, best-known product, and they're saying that the board had no previous awareness that it was going to be launched. Now, there's a caveat there. When they released this product, it was kind of a slow burn initially. People didn't know it was going to be as big as it became. But the bigger takeaway from this piece is that she's really getting at the idea that there was a long series of times where they were either misinformed, uninformed, or felt like they were being manipulated by Sam Altman. And for months now, it's been a guessing game in and out of Silicon Valley. What precipitated the ouster last year? This is really the most that we've seen so far that gets at that question.
Seth, as you know, I remember the weekend of Sam Altman's ouster. Helen Toner didn't pick up the phone. She hadn't had much to say then. In the last 24 hours or 48 hours, she's had quite a lot to say. But the issue is the relationship with Sam. This is something Sam Altman told Bloomberg last year. Have a listen.
You have an incredible amount of power at this moment in time. Why should we trust you?
You shouldn't. I think at this moment in time, people deserve basically as much time asking questions as they want. And I'm trying to show up and do it. But more to that, no one person should be trusted here. I don't have super voting shares. I don't want them. The board can fire me. I think that's important.
So at its root, there's Sam Altman pushing to commercialize the technology, and then there's different iterations of the board who seem unaware. I don't really know where to go next with that.
Well, you're right. Again, it's pretty remarkable. I think there's been a drip from Helen as she's become a little bit more comfortable being public about her concerns. You're right. For months, we really couldn't get much detail. What we had heard was essentially that there was a long simmering buildup of mistrust and miscommunication. And in her latest statements, we're seeing a little bit more on that.
Seth, the current context is that you can't trust Sam when it comes to discussions with celebrities, when it comes to... that ultimately is what people are now realizing, rightly or wrongly. What was cast into the public discourse has, of course, been Scarlett Johansson and the calls, at what time they happened, and OpenAI really trying to lay out the order of occurrence of when they discussed using the voice of Scarlett Johansson and when they'd already talked to actors and actresses. Right. But there is a feeling of distrust growing.
I think so, and I think they're taking pains now to be as transparent as they can be. What's funny is that for all of the tension that they've had with board members, never cross a famous actress. I think that's where you're going to really lose the public.
Seth Fiegerman, we'll see what the next response is from OpenAI amid all of this. We thank him for walking us through it. Meanwhile, OpenAI has actually got some competition, you know it, and one of them is from France's Mistral AI, which was launched in early 2023 as a European rival, but it's now eyeing the United States. We're bringing in Bloomberg's Mark Bergen for more, and they're hiring a key member of talent.
Right. So this has been a major hire, and this is a really closely watched startup here in Europe, and there's really no precedence for company, aside from maybe Spotify, becoming a global technology success out of Europe. And that seems to be the ambition of Mistral. At least that's what their investors are signaling, right? There's reports that in probably less than 14 months, they've now gone from zero to a company worth $6 billion. And so there's a lot of expectations and a pretty high valuation they have to meet.
Mark, give me a sense of Mistral's size and scale. We report on them a lot. They're a little bit shy. They've been regulatory focuses in Europe. Tell me about the basics.
The basics is they're pretty small. That's sort of that. I think that, from my sense, it's probably a team of maybe around 50 at this point. It could be a little bit bigger than that, but that's sort of their MO, is that we are leaner. We're building these smaller, more agile AI models. They're open source. They're very, at this point, very close to the French government, in the sense that one of their co-founders and kind of their policy chief is the prior French digital minister. Macron has talked about supporting them. Last week, he gave this really interesting comments about how he preferred that they would grow big on their own and remain independent. The sort of subtext there was, don't sell to a big tech American firm.
Bloomberg Smartbergen, terrific reporting out of Europe. We really appreciate it. Now, coming up on Bloomberg Technology, we're going to be joined by the Ring CEO, Liz Hamren, for her priorities for the company as its CEO 1 year in. A quick check on shares as well of Tencent. US ADRs of Tencent, if we bring those up. No, Wednesday's trade overnight in Asia, down 2.4%. Interesting data about marquee sales on the video games front, not as strong as some had hoped. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco.
I'm Caroline Hyde in New York. A quick check on your markets today because we are more worried about borrowing costs. Bond yields rising, that's dragging some of the stock markets lower. Actually, the NASDAQ and the NASDAQ 100 outperforming other key US benchmarks, but we are lower by 0.4% on the big tech benchmark of the NASDAQ 100. 10-year yield as a 30-year yield across the board. In fact, we're seeing borrowing costs rising as we have another big auction, $44 billion of 7-year debt coming. Will there be not as much demand as was hoped, like we've seen in the previous two auctions? We're up 6 basis points. Bitcoin on the downside, we're off by 0.9%, 67,000. Moving on, though, as we try to mark through what is a slight tempering of risk appetite. The SOX is one of the ones that underperforms. The Philadelphia Semiconductor Index off by 1.5%. Every single chip maker down. But that's because they've been rallying so hard in previous weeks. Maybe we've got a little bit of profit taking going on. Certainly the case for Moderna. We're off by almost 5%. Had a horrible day yesterday, but that's after it had a record winning streak of 10 straight days of gains. Profit taking, this is a company also injecting generative AI throughout its focus on healthcare. We're looking at Amazon, actually one of the outperformers on the day. We're up 0.75%. Nice little headline there that they're once again improving, expanding their partnership deal with Germany's SAP. So a key focus there on the power of generative AI coming into Bedrock and AWS more broadly. And Ed, we got more on Amazon.
Yeah, we do. For years, the Amazon unit Ring touted its crime-fighting features thanks to its selling smart doorbells that let homeowners remotely monitor their residences. But today, the kind of footage Ring users share is less about suspicious activity and more about pets or wild animal sightings and water balloon fights. And it's all part of how Ring is trying to reinvent itself, aiming for more of a mashup between something akin to Nextdoor or even TikTok. Here to discuss the why is Ring CEO Liz Hamren. And actually, the first sort of sit-down interview since you've been CEO. Actually, you and I met almost 1 year to the day. You are 1 year in this role. The best place to start is probably why a new mission? What prompted you to say, OK, Ring's got to be a different company?
Well, you know, our new mission was really prompted by my last year of going out and talking to our customers and talking to our employees and seeing how people were using our cameras. And one of the things that we found is that while our mission around safety and security is still very relevant, people use these cameras to feel safe and secure. But they were also using them for so much more, for convenience. Did my packages arrive? For presence and control. How busy is my small business? Do I need to send more staff? Or connection. People do love to watch their pets with their Ring cameras. And we were finding as we were building new products that the mission was limiting and just too narrow. And so our new mission is just more expansive for how people use our products and how we want to build products.
The expansive part's interesting. Full disclosure, we are a Ring family. You know, often when my father-in-law's here in San Francisco, he's worrying about whatever's going on at home down in SoCal. He consults his phone to check it on Ring. These new areas, do you see sort of a meaningful split? Or even can you give me a proportion of what sales you think are driven by security versus, I guess, what is social interaction?
Well, I think that it's about, you know, why do I buy and then how do I use it? And a lot of why people buy is they want to be connected to their homes. Their home is one of their most valuable assets. They want to see what's going on. They want to feel safe and secure. But what they find is there's any number of convenience features to using it. I suspect that what your father shows you is not just security and safety features, but funny things that happen at home or surprising weather or any number of things that make you connected to your home or small business.
That connection is allowing you to, well, make some revenue, drive $20 a month subscription, and you now are aiming and have attained profitability. Is that sustainable, Liz?
Yes, I believe so. I think this is actually just the beginning of continued significant business growth. Last year we grew double digits, and we see continued growth here, especially as we think about Ring really being a video service company. When people talk to you about their Ring cameras, they're not showing you their camera as iconic, as our hardware is. They're showing you video on your phone. And that video service is incredibly valuable. And as we invest in computer vision and AI to make it even more valuable, we think the business will continue to be profitable and grow.
Liz, your expertise has been in the world of connected cameras. You came from .com. You've got a lot of business expertise prior to joining and leading Ring. Was now the moment to turn on the money pipeline, or is it more where Amazon is within a focus on profitability rather than growth at all costs?
I think that I'm not sure I would think about it as this binary decision. I mean, the business is very healthy, and the natural course of this business is to be profitable based on the size of the business and the customer demand. And frankly, the vast majority of our customers subscribe to our subscription service, and that is a big driver of our business health.
Liz, it's an interesting time at Amazon. Panos Panay's come in to lead the devices and services group broadly. How has your relationship been with him, and how do you work together? Because there's a lot of, interoperability between Ring, the Amazon ecosystem.
Yeah, Panos and I actually worked together back in my days at Microsoft. So it's awesome to have him leading devices and services for Amazon. And, we work together to ensure that all of our products work together. And so, many customers connect their Ring cameras to Alexa. And about a third of our doorbell customers actually use an Echo device as their chime.
It's competitive. I get advertisements all the time for other similar camera-based technologies. What would you say is Ring's point of differentiation? Technologically speaking, what is it that you are doing better or at a higher level than the others?
Well, I think it's a combination of our software and our hardware, but really the differentiation is in software. And as you point out, there's lots of cameras on the market, but what makes them unique is really how the software takes advantage of the hardware capabilities.
I have to say, looking at this footage is hilarious. This guy trying to scare this bear off through his Ring camera. And I've actually watched many friends trying to be terrified about a squirrel inside their house due to some sort of camera. What's so interesting is you oversee other parts as well. There's Blink camera, there's key and home delivery services, as you're saying, and people using these sorts of technologies for efficiency and for knowing when you've got deliveries. Sidewalk wireless network, almost a mesh network here. You're not going into the world of thermostats and other connected areas in your part of the business, are you, Liz? Because for me, that's a differentiation that Google offers, for example, with Nest.
So for Ring specifically and Blink and the areas that I oversee, we're really focused on this notion of understanding what's going on at your home or business, and then with Key providing access to it. And so although those products are interesting, they don't really fit with our mission of keeping people close to what's important. And so I think we're just really focused on the products that do that. And I think we're pretty busy and full just fulfilling on that mission.
Alice, the director in New York, is going to bring up that footage of the bear again. I see that all the time. I see images just like those. What are those? Wild boar or something? Squirrel? Fantastic. But I see them on TikTok. And I see them on Instagram Reels. That's where the content is shared. So how does Ring derive a benefit from the enthusiasm of the customer who then takes it and shares it elsewhere?
Well, I think in two ways. One is we love our customers to feel like they get a lot of value out of their products. And one of those values is being able to download videos and share them however they would like. And then it also drives awareness of the product. So people who maybe aren't yet Ring customers see those videos and think, oh, I really want to make sure I can stay connected to my home.
It's like marketing, through social, and it's like ownership spreading the word like Tesla does with its EVs. I find that, raccoon. Ring CEO Liz Hamren, it's just fantastic to finally get you on the show 1 year into the job. Thank you so much. Kara, you've got some other news headlines.
I do. What a great conversation. But it's time for Talking Tech now. And first up, Nobel laureate Paul Romer issuing a warning about artificial intelligence. Speaking to Bloomberg TV in Hong Kong, the economics professor likens the AI market run to the crypto hype bubble. Take a listen.
Right now, there's way too much confidence about the future trajectory of AI. When people project this forward, I think they're at risk of making a very serious mistake. We've benefited from scaling up compute and ingesting a whole lot of data. Scaling up compute's pretty easy. It's just more machines, more chips. But what's going to happen is we're not going to have enough data.
Meanwhile, talking of hype or not around AI, the US and UK arms of accounting firm PwC. They're set to start selling OpenAI products directly to clients. Now, the agreement will allow PwC to become the first reseller of ChatGPT enterprise products geared towards business use. Terms of the deal were not disclosed. And a lawsuit challenging web scraping practices of OpenAI and Microsoft has been dismissed by a federal judge in California. The complaint accused OpenAI and Microsoft of violating property and privacy laws by stealing data to train AI systems. Now, the judge slammed the attorneys who filed the complaint for being excessively long and meandering, calling the suit, quote, unnecessary and distracting. Meanwhile, coming up, we'll talk about the state of the US IPO market with Eric Hippeau of Lerer Hippeau coming up next. This is Bloomberg Technology. About a little bit earlier, the lack of IPOs in the market. And in a recent op-ed, Lerer Hippeau managing partner Eric Hippeau argues that the number of public US companies is plummeting. And that's bad news for the democratic component of the economy, saying exit opportunities, they're critical to the promise of American innovation, and neglecting them will be our collective detriment. I'm pleased to say we're welcoming to the show now Lerer Hippeau managing partner Eric, as you helped write that out and now thinking about broadening out the conversation. You articulate why it's bad for wannabe investors and indeed for future growth and financial benefits to many, Eric. But why is this happening from your perspective?
Well, it's happening mostly due to regulations. That's the number one factor. Number two factor is that companies are choosing to stay private longer because there's more private capital. It's a bit of a conundrum because obviously all of this private capital is expecting an exit at some point, which is likely to be the public markets. So we used to have 8,000 public companies back in the 90s. We are down to less than 4,000. At this pace, we'll be down to 2,000 in another 20 years. 2,000 is about the size of the London Stock Exchange, which, by the way, went from 4,000 to 2,000. So our stock exchanges are shrinking, not in terms of valuations, but in terms of the number of public companies, meaning that the remaining companies have higher and higher market capitalizations, and it's very difficult for young, innovative, growing companies to go public.
Can we think about this, Eric, through the lens of a case study, if you don't mind? I think about Elon Musk, Inc. You know, he's documented the challenges of being a public company CEO of Tesla. And if you, by comparison, look at his private companies, SpaceX, XAI, the company formerly known as Twitter, many would argue that he's able to innovate with more freedom because he's free of the responsibility or scrutiny or even the transparency required of being a public company. What would your response be to that case study and that line of argument?
I would say that Elon is pretty distinct and remarkable by himself, and that he's been able to raise billions of dollars in the private market for his companies and stay private a lot longer. This is not within the reach of most private companies. Most private companies are able to raise, in the tens of millions or hundreds of millions at most, but to have access to $1 billion, $2 billion in capitalization, you need the public market for this. So when Elon's companies go public, they're already pretty substantial companies, and so that's not the norm. The norm, what we're looking for, is the ability to have public companies being capitalized at around $1 to $5 billion. That's where there is almost no IPOs, and this is kind of the point of entry. Let's take the example of NVIDIA. NVIDIA went public in the late 1990s at a market cap of about $600 million. Let's say that's about $1 billion in today's money. That company now is worth almost $3 trillion. So a remarkable rise. And a lot of the public shareholders, the people who are able to buy those shares in the early days have become, if they kept them, have become very, very rich. That's the kind of momentum that we're looking for.
But therefore, if it's regulation that stifled it, is it less regulation that's needed? And therefore, how do you protect an investor base with less regulation?
Well, it's going to be judicious regulation. You know, the tipping point really was the Sarbanes-Oxley Act of 2002. A lot of smaller public companies were forced to either delist or merge or go private, given the burdens imposed by SOX, by that particular act. So this, in my mind, this needs to be reviewed. Do we really need all of these controls, all these internal controls? You know, we're assuming we're kind of assuming that people who go public have something to hide, have you know, bad intentions of sorts. We need to go back to you know, a place where we allowed
Eric,
capitalism. Yes.
Eric, I just would push back on that slightly. I mean, one reason that it's such a privilege to host this show with Caroline is that we come across all kinds of founders who dream of taking their technology startup public because of the prestige or because it gives their staff liquidity who may be long-serving. You know, in many instances, that's the dream and it's still intact. You know, you're an investor and you're part of this ecosystem. Do you not recognize that still being a part of the dream?
Very much so. It's in some cases almost the only dream, right? That's your exit. So let's take a typical company in a private portfolio such as mine. Company does $100 million in annual recurring revenues. You know, grows 30 to 50% a year. Has EBITDA of about $20 million. Again, I'm using a general case. And they want to go public. So what's going to happen? The cost of going public is going to cost them $10 to $15 million a year, right? So that's over half of their EBITDA. So suddenly the valuation that they might command in the public market is way less than it should be as a result of this. So there's plenty of companies in that situation who would like to go public. They've been in business for 10 years or more. Their employees need that liquidity for their own equity. But it's not really possible for them to do so.
Eric Hippeau, managing partner at Lerer Hippeau. I can say with certainty that Caroline and I both thoroughly enjoyed that conversation. Thank you for coming on the program. All right, coming up on Bloomberg Technology, Apple winning a legal battle in China over its App Store fees. We're going to go to Bloomberg's Mark Gurman next. This is Bloomberg Technology. A Chinese court dismissed a case filed by a local consumer against Apple's commission and fees for purchases via its App Store, granting the US company some reprieve as it faces growing scrutiny around the world over its practices. Bloomberg's Mark Gurman is here with more. Mark, give us the details of this specific case and why it's important.
Yeah, a consumer in China sued Apple locally over the company's 30% or up to 30% take rate on applications, saying that this, stifles competition. This is the same 30%. This is the same situation that we've seen play out in the US, playing out in Australia with Epic Games. Obviously, the European Union has been largely against this. And this is a time where Apple actually got a rare win. Apple has been fined in many places. They're losing portions of lawsuits over this cut. The cut is at the heart of a continued battle between Apple and a judge in California. And this is something Apple's likely going to have to shake up. You've already seen Apple throw out the concept of 30% as part of the Digital Markets Act in the European Union. And over time, I expect even more significant changes to the Apple revenue share agreements in the US and elsewhere as well, as this legal pressure and pressure from both consumers and developers continues to heat up.
For now, China the outlier. Mark Gurman, great wrap of it all. We thank you so much. Meanwhile, let's go from Apple to Meta, because Meta's just removed hundreds of Facebook accounts associated with covert influence campaigns from China, Israel, Iran, Russia, and other countries, some of which used AI tools to generate disinformation. It's according to the company's quarterly threat report. Well, let's bring in Bloomberg's Kurt Wagner. And I'm assuming maybe they used AI to find this disinformation too?
Yeah, they use AI and algorithms to detect a lot of this stuff and do it at the scale that they need to for Facebook's products, right? I mean, they have billions of users, billions of pieces of content. That's not really something that they can necessarily do manually, although they do have teams that then, once things are detected, kind of go in and do some investigating manually. But I think the important part here is that, we are seeing a little bit more generative AI content that is being used to mislead people. And I think that this is not a surprise, but it's something as we head into the 2024 election, as we head into, important Senate races, this is something that they're paying close attention to.
Kurt, when Meta finds this content, generative AI driven or otherwise, what do they do in response?
Yeah, their goal, and they've been doing this for years, to be clear, this is not a brand new thing, but their goal is to basically wipe out these organizations, wipe out these, groups before they're able to gain any kind of traction. They've gotten very good at doing that since 2016 election, you may remember. And so most of the time when they're sharing this stuff, they're catching these things before it reaches a huge audience. And I think that's the big key. Now, sometimes things do, slip through, but ultimately they're trying to find these groups and eliminate them before they can reach some type of scale.
And Nick Clegg, the president of Global Affairs, really saying you've got to detect, you've got to label this AI-generated content in particular. Kurt Wagner, great breakdown as we face, more than 30 elections worldwide this year. And look, that does it for this rather busy edition of Bloomberg Technology, Ed.
Yeah, there has been no stop in the news flow in the world of tech. Real quick, I won't be on the show tomorrow. I'm away on a top secret mission. Stay tuned. Check out the pod. Many of you do on your way to work, way home from work, or just hanging out. Apple, Spotify, iHeart, and we publish to all the Bloomberg platforms. From San Francisco and New York City, cue the beautiful pictures. This is Bloomberg Technology.